Good morning and welcome to Beyond the SEAF Model. I'm Jack Kosar. This is effective for November 25th, 2024. Let's get started. SEAF signals for this week. We have financials, energy, and consumer discretionary. Energy coming in and replacing communication services. That took a little bit of a step back for the trading week. Seeing some strength in energy with a trading week of 2. And utilities being a top for the trading week. Now, this is all to note that the flows for this particular week were relatively light relative to what we've been seeing over the last couple of weeks. Anecdotally, this tends to happen prior to holidays, and with the U.S. having Thanksgiving this upcoming week, we tend not to see the strength of flows that we do on a typical week. Again, this is anecdotal. I don't have any hard numbers around this. Just having watched this model for a little bit, I do tend to see a little bit of lighter movement. With that being said, last week, overall flows for the 11 sector spiders were up 2.8% with 3 consecutive days of positive flows for Wednesday, Thursday, and Friday. And with that Friday's inflow of flows, it was actually the peak, the total amount of flows, if you add up all 11 sector spiders, have hit a new high. So that is not necessarily actionable, but interesting in terms of the continual growth of the ETF space in this case, the 11 sector spiders. Healthcare continues to be the worst among the 11 sector spiders, though getting a little bit of a break with a 10. Worst mark goes to technology. And let's head over to our heat map. Heat map doesn't look as clean as we've been seeing it over the last couple of weeks, but still have some strength up here up top. Financials with ones in the technical month and strategic quarter coming in. Taking a little bit of a breather with a 4 on the trading week. It looks like consumer discretionary also has taking a little bit of a breather. We're going to break that down a little bit more when we hit our rainbow charts, as well as I'm going to bring up a price chart of consumer discretionary just to kind of highlight what's going on there. As I said, the flows are a little bit weaker. Top flow for this week was utilities, actually tied with energy at 0.22% inflow, and then outflows at negative 0.27% for technology. Like a normal strong week is going to have 0.4. We've actually been seeing flows exceed that for the trading week, but again, anecdotally a little bit lighter due to the impending U.S. holiday. Other thing that we're kind of noting to see is utilities kind of jumping right back up there again. Not super strong, but after taking a little bit of break, starting to see a little bit of upward progress there. And similar thing with materials. Materials showing a positive bias from 6 to 3. But again, with those, we're not seeing any major accumulation in assets, and regarding utilities, we definitely need to see this tactical month flip before we really can start to take any advance, but we'll highlight that also in the rainbow charts. First, I wanted to highlight is consumer discretionary. Consumer discretionary has a nice positive relative performance versus SPY, really going back to late July, early August. As we've climbed in from that deep void up into this favorite area, seemingly taking a little bit of a break. As you can see here, the relative trend is a little bit sideways. I did want to bring the price chart in here. It looks like we tested resistance, and this resistance line goes back to 11/22 of 2021, so November 22nd of 2021. It's a big time resistance point. In this case, testing support. So as we've tested support here, it rejected that, and we have gone back up higher. What we can say without knowing the minds of the traders and the managers that we talk about on a weekly basis, what we are seeing potentially here is after a nice run up, taking a little bit of profits, also knowing that they have this massive support to kind of sit on. And as you can see here, it came up, tested the support, and then have turned up. So we're not projecting cash flows going into the future, but this pattern here shows us that we could go higher, and it's just nice to see, especially with taking a little bit of breather. The other thing I wanted to note here with consumer discretionary, I'm going to pull up our overall chart here, or our table here, is this strength that we see in the tactical month and the strategic quarter allows for a little bit of wiggle in that trading week. We have some really strong numbers going back for tactical month, strategic quarter, have built up some kind of a little bit of a wall here. So we can allow for a little bit of wiggle in this in this favored ranking area and still maintain a positive trend going forward, even if there is some profit taking up near the top. So just interesting to note. Moving on, energy. Energy continues its rocket up. We saw a similar rocket up move here in February and March. And as you see here, we had a nice little sustained relative outperformance trend here. We're attempting to break some upward resistance with the relative performance side of the chart, but overall looking favorable as flows are shooting into energy. Energy was the second best, I think only by slightly, with a 0.22% increase, and it is starting to develop, as we can see in our heat map, starting to develop a little bit of that kind of momentum block that we see for both financials and consumer discretionary. So we'd like to see this, as we continue to accumulate assets in energy, we'd like to see that start to shift to the right and start to really build up that momentum over several time periods. But energy looking relatively positive this week. Financials. Financials isn't as favored as was last week, taking a little bit of a break, but last week it was ones across the board with a total score of 3, so there was nowhere up to go from there. We do have this nice relative outperformance trend and even steepening coming back since late August, early September, and really just, financials has been on a nice run and showing some really nice positive relative outperformance. Looking at utilities, utilities was the top trading week, and I like to bring these things up as we see flows come in, because you're like, hey, we see nice little bit of relative performance move for utilities as it has shifted from avoid into neutral. But broadly, as you can see here, we're sideways, and we have some pretty strong resistance in the relative outperformance chart here at the bottom that utilities needs to break through, and we would need to see some sustained weeks. Or a couple of weeks in a row, similar to we saw energy. That's financial, sorry. Similarly, we saw energy. Energy, we started to kind of peak up into here, into neutral, and then with several consecutive strong weeks, we kind of shot up into this favored. We would need to see that same pattern kind of elicit here in the utilities portion. A couple of sustained weeks of flows. Again, energy saw some really strong flows over that course of time. Utilities, first week in the trading week to resume into this positive trend that we had coming back into late January, early February. So we need to see more out of utilities for this to happen. Last but not least, healthcare. Looking at healthcare got itself slightly off the bottom here with a trading week of 10 instead of 11. So we didn't have 11s across the board as we did last week. Seeing the slightest of upturns, nothing to do in healthcare. It is deeply red, deeply avoid. But just wanted to note that, I guess for fun's sake, that the avoid did dip a little bit off the bottom here. But overall, healthcare continues its downward trend of relative underperformance versus the benchmark of SPY. That is all I have for this week. I look forward to breaking the SEAF model with you all next week.